Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's a natural resource specialist at Uncommon Wisdom Daily, the website uncommonwisdomdaily.com. Welcome back to the show, Sean.
Thanks very much for having me on.
People are wondering, will the Fed pull the trigger on higher rates? What's your opinion?
Absolutely, they will. It's priced in very highly, and the Fed doesn't like to surprise the market. Now, here's the thing. We have to look at how hawkish the Fed is in its statement, because right now the market is pricing in 3 rate hikes this year. If the Fed's hawkish enough that the market starts to price in a 4th rate hike, that's something that could roil the markets a little bit. Of course, these markets have been so flat calm, it's like looking out on a sea of glass. Also, look what happens to the 2018 rate hike pricing, because again, we're expecting 3 rate hikes next year. If that jumps up to 4, again, that would be something that would really probably affect the market. So, however, that said, and I've been talking about rate hikes a lot ever since Janet Yellen completely changed her stripes. She hoisted the pirate flag and went really hawkish all at once, and her friends on the Fed did too. So that's when I changed my tune. When the facts on the ground change, you have to change with them. But even if they do start to hike, they'd be trying to catch up with inflation, and it looks like inflation is really heating up. The producer price index just came in at 0.3%. It was expected to be 0.1%. So if the Fed does go on a rate hike series, it'll probably be lower than the rate of inflation, which means that we could see negative real interest rates, which is a environment in which gold can do well. One thing you have to notice is how well gold is held up, even as we approach the Fed speak, because people believe all the bad news is priced in. Maybe it is, maybe it isn't. But I don't think people are afraid of a few rate hikes here. It's only if it looks like the Fed's going to raise rate hikes much faster. That's when it would really affect gold.
What about the stock markets? Can they withstand a number of rate hikes?
The thing about the stock markets, and you were very kind to give my Uncommon Wisdom a daily website, which is where I'm working professionally, but I also have a blog called kingoneye.blogspot.com. That's a numeral 1 in that one. And I just put up a chart there today of the New York Advanced Decline Index that charts all the stocks on the New York Stock Exchange, including ADRs of foreign corporations. And that gave a sell signal because the market breadth is not that good. And what that means is that the major indices are holding up well, but that's really due to the leaders. In the ranks, there isn't much good news. There are actually more issues falling than there are going up. So that isn't absolutely definitive, but you combine that with the fact that in January there was so little insider buying that it was the worst insider buying since the Reagan administration. And it seems like we could be in for a tradable correction. I'm not talking the end of the universe or anything, or a big recession or anything like that. What I'm saying is, we could see some air come out of the market, could be tradable. And so I think people should be aware that that kind of thing could happen. So I think and this is contrary to what you're hearing on Wall Street nowadays, but this is just how I feel. I think that there's more risk to the downside for the market right now than there is risk to the upside. Now, Janet Yellen and her friends on the Fed could change all that because the market loves nothing more than easy money. And maybe their dovishness will surprise us all. But the way things look now, I think that the market could have a little correction here, maybe 5 to 7%, and that could be tradable.
We'll have more with Sean Brodrick right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Sean Brodrick. Sean, the Saudis now admit that they've thrown another 10 million barrels a day into the production mix, and we've seen the result with the prices.
Yeah, prices went way down. On the bright side, and the bulls will tell you this, actual broad OPEC production went down. It's just that the Saudis are producing more. Now, I mean, I'm the one who called for the death of OPEC, so I won't chortle too much. But it does look like we'll see lower prices here. An interesting thing is also happening in natural gas, where since this giant storm blew through, the price of natural gas is starting to roll over. I think that we're going to have a long, hot summer, and so people shouldn't actually plan on much lower for longer for natural gas. I think after it finds the next bottom, could head higher from there. So the thing with oil is that it needed some kind of movement anyway. It had gone flat sideways for a long time. Turned out the movement was down. That's good. That brings up plenty of opportunities. One thing to keep in mind is that there's a tremendous amount of debt in the U.S. and the oil services companies. A tremendous amount. And so if the price stays lower for longer, we could start to see some of that debt really implode and those companies fold. We already had one culling in that area. I think everyone thought that was pretty much over, but we'll have to see what happens here, how this shakes out, how low. I mean, I would have to think when you actually look at this, how low things could go. You would have to think $45 would be support on the downside for crude. Maybe I'm wrong though. We'll just have to see how that works out. If that's the case and we see a bottom there, that might be a time when you can actually fix some things up because things are getting cheap again pretty quick, so that really raises some opportunities there. You don't want to buy things when they're too expensive. You want to buy them when they're cheaper. We, just had that opportunity in the gold miners and explorers, and we might get that one again depending on what happens with the Fed. So, we could get that one with oil too, and that would be okay by me.
We'll have more with Sean Brodrick right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Sean Brodrick. Sean, you were at the PDAC meeting in Toronto. What was your feeling there?
Generally, I find people are more bullish now than certainly in 2014, which was a terrible time, and more than last year too. And last year was actually the start of a really great run. But I think people are saying, I keep putting up this chart of the cycles in gold and how it has, these huge bear markets followed by huge bull markets, and it just it's a very cyclical metal, and we're into the bullish cycle now. So pullbacks can be bought. I think the market recognizes that generally. And also, despite the rally of the last couple weeks, especially in the explorers, some of them are just so darn cheap compared to their assets. It's not funny. So that looks like a perfect setup for some real consolidation, or at least investment by the larger miners who have more cash than they know what to do with, and certainly more cash than they have things in their pipelines. So I might look for some of that going forward. Look for some consolidation. Look for some big miners who really liked what they saw at the PDAC, saying, you know what, we should pick up this company while it's still cheap. I certainly think that could happen.
Does it help if investors have American dollars to put in because the Canadian buck is falling?
It is falling, you know. The U.S. dollar, though, it is looking kind of top-heavy, right? It hit that high in December of 2016, and it's been lower since then. I just saw an interesting note saying that the U.S. dollar is trading like an oil currency now. And that makes sense when you think about it, right? Because along with OPEC, along with, like, Saudi Arabia, the big swing producers are the U.S. shale producers. And so maybe as oil weakens, if it continues to weaken, we'll see some weakness in the U.S. dollar. Now, I certainly like the exchange rate when I go up to places like Toronto. That was very nice. I must say it was a great exchange rate for me, probably not so much great for you. But, you know, I do think we could see some things shift around. That big run in the U.S. dollar from November through the end of the year came on hopes, dreams, and promises of what was going to happen under the new presidential administration. And it's just very hard to actually deliver on people's dreams. You know, it might be that they want to do certain things, but, you know, Washington is a very, let's say, swampy place, and so getting things actually done is very, very difficult. And that reality might not actually line up with what people were hoping for. And so that could take some wind out of the sails of the U.S. dollar as well. So it had a great run. It has eased off since then. It's been going sideways for like the past month, but especially if we see some bad news in the stock market, which would probably be economy related, then I could see the U.S. dollar taking another leg down.
Some have suggested if Yellen does a continuous stream of rate hikes, she's actually attacking Trump so that his policies can't work. I
don't think, well, that sounds kind of paranoid to me. I mean, what she wants to be is she wants a nice, boring economy, right? She wants growth, but not too much growth. She wants some inflation, not too much inflation. That's what she'll be judged by. She won't be judged by what happens with Trump, how good or bad his historical legacy is. She'll be judged by how she runs the economy, the part she can run. The Fed has very limited power, and, you know, people rage for or against their rate hikes. The Fed only has one tool set. What the heck else are they going to do? So I don't think it has anything to do with Trump. I mean, his promises of more infrastructure spending might have made her think about inflation again, but I think it's more important what's happening in Europe. I mean, let's say that the French do vote in Le Pen. That puts the European Union in trouble and the euro in trouble. And so do we dare hike rates when the euro's kind of skidding around and like stuff like that? Then the Germans, the Germans just came out and said that they think rates are too low. So, you know, that's kind of making people wonder, well, are they going to hike rates there? That would give the French more reason to leave the euro, right? Because they don't want a stronger currency. There's a lot of stuff happening overseas. I would watch the election in France. I would watch the election in the Netherlands. It looks like Great Britain is steaming toward a Brexit sooner rather than later. These are all things that can affect the global currencies. And then, of course, we have to talk about China and the staggering amount of debt they have. And if you raise rates too high too fast, you know, some of that debt won't be able to service. Does Janet Yellen want to be blamed for causing some kind of global meltdown because she made the rate so high that the people over in Asia couldn't pay their debts? I don't think she does. So I think she's worried less about Trump and more about keeping things on an even keel. And that's what you should try and keep in mind going forward.
Speaking of China, should we be paying more attention about what's happening there?
Well, they have come out with some good news lately. So I think, good economic news. So that's good. But the debt's still there and the debt still keeps growing. And it seems like money is still fleeing the country. So obviously it's not all roses and honey over there, is it? So yeah, we should keep that on our radar. With the major indices so high, the thing about black swan events is you can't predict them, right? But with the major indices so high, they do tend to get priced for perfection. And if things aren't perfect, you could see a correction. Now, the markets have been so deadly dull and boring that I think many traders are asleep at the wheel. They're, markets just kind of drift along. I guess that's fine. I'll look for some value in certain stocks or industries or like sectors. But if it's so boring, that's when some big corrections can come. So again, I'm not calling for doom or gloom, but I'm just arguing against complacency. People shouldn't be complacent in this market. I think that would be a big mistake.
Time for people to really keep their eyes on the wheel.
Yes, very much.
Or on the road. You keep your hands on the wheel. See?
Yes.
Don't put me in the race car. Sean, thank you so much for chatting with us.
Thanks very much. I enjoyed it tremendously. My
guest has been Sean Brodrick, Natural Resource Specialist at uncommonwisdomdaily.com. And you can also check out his blog, king1iblogspot.com. You're listening to HowStreet.com radio. Questions can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.